Section 1. Understanding credit scores. Credit scores are crucial in today's financial world. They are numerical representations of your creditworthiness. Lenders use them to decide if they want to give you a loan or a credit card. Higher scores mean you're a lower risk to lenders. This can lead to better interest rates and terms. Your credit score is calculated using several factors. These include payment history, amounts owed, length of credit history, new credit, and types of credit used. A good mix of these elements typically results in a higher score. It's important to monitor your score regularly. Many people don't realize how much a low credit score can cost them. Higher interest rates can mean thousands of dollars more in payments over the life of a loan. A bad score can also make it harder to rent an apartment, get a job, or even set up utility services. Maintaining a good score is vital. Understanding your credit score and how it's calculated is the first step. Knowledge is power. By knowing what impacts your score, you can take steps to improve it. Section 2. Common causes of sudden drops. There are several reasons your credit score might suddenly drop. Missed or late payments are common causes. Even a single late payment can have a significant impact. A sudden increase in credit card balances is another cause. High balances can significantly lower your score. Errors on your credit report can also cause sudden drops. Regularly checking your report helps catch and dispute errors. Applying for new credit can cause a temporary drop. Each application results in a hard inquiry, lowering your score. Section 3. How to identify the cause. The first step in fixing a sudden drop in your credit score is to identify the cause. Start by checking your credit report. You can get a free report from each of the 3 major credit bureaus once a year at annualcreditreport.com. Review the report carefully for any inaccuracies or unfamiliar accounts. Look for any recent changes that might explain the drop. This could be a new late payment, a large balance increase, or a new credit inquiry. Take note of anything that seems unusual or incorrect. It's also helpful to compare reports from different bureaus, as they might have different information. If you find errors, make a list of them. Include details like the account number, the specific error, and why you believe it's incorrect. This will be helpful when you start the dispute process. Remember, even small errors can have a significant impact. In addition to checking for errors, review your recent credit activity. Look at any large purchases, new credit applications, or late payments. Understanding these factors can help you pinpoint the cause and take appropriate action to fix it. Section 4. Quick fixes, dispute errors. One of the quickest ways to boost your credit score is to dispute errors. Start by gathering evidence that supports your claim. This could include bank statements, payment records, or correspondence with creditors. The more evidence you have, the stronger your case will be. Next, contact the credit bureau that reported the error. You can do this online, by mail, or by phone. Provide the necessary details, including the error you're disputing, the evidence you have, and why you believe it's incorrect. Be clear and concise in your communication. The credit bureau is required to investigate your dispute, usually within 30 days. During this time, they will contact the creditor who provided the information. The creditor must then review the evidence and respond to the bureau. If the error is confirmed, it will be corrected on your credit report. Following up on your dispute is crucial. Check the status regularly and provide any additional information if requested. Once the dispute is resolved, get a new copy of your credit report to ensure the error has been corrected. This can lead to a quick boost in your score. Section 5. Rapid improvement, pay down balances. Another effective way to quickly improve your credit score is to pay down your credit card balances. High balances can significantly lower your score, especially if they're close to your credit limit. Reducing your balances can quickly improve your credit utilization ratio, which is a key factor in your score. Start by prioritizing which balances to pay down first. Focus on the cards with the highest interest rates or the highest balances relative to their limits. Paying these down will have the most significant impact on your score. If possible, aim to pay off the entire balance, or at least reduce it significantly. Making extra payments can also help. Even small additional payments can reduce your balance and improve your credit utilization. Consider using any extra funds, such as tax refunds or bonuses, to pay down your cards. Every little bit helps. Keep your balances low once you've paid them down. Avoid making large purchases or running up new debt. Staying disciplined with your spending can help maintain your improved score. Section 6. Immediate action. Become an authorized user. Boost your credit score by becoming an authorized user on someone else's credit card. This is helpful if the primary account holder has a history of on-time payments and a low balance. Their positive credit history can reflect on your report. Ask a family member or close friend with good credit to add you. You don't need to use the card, just being added is enough. The account's history will appear on your report within a few billing cycles. This can quickly improve your score, especially if your credit history is short. Confirm with the issuer that they report authorized user accounts to credit bureaus. This ensures you'll benefit from being an authorized user. Section 7. Strategies open new credit accounts wisely. Opening new credit accounts can also help improve your credit score, but it must be done wisely. New accounts can increase your available credit and lower your overall utilization ratio. However, too many new accounts can hurt your score, so it's essential to be strategic. Start by researching different credit card options. Look for cards that offer benefits like low interest rates, rewards, or no annual fees. Applying for cards with pre-approval offers can minimize the impact on your score, as these typically involve a soft inquiry. When you open a new account, use it responsibly. Make small purchases and pay off the balance in full each month. This shows lenders that you can manage credit responsibly and helps build a positive payment history. Avoid maxing out the card or carrying a balance. It's also essential to space out your applications. Applying for multiple accounts in a short period can result in several hard inquiries, which can lower your score. Aim to wait at least 6 months between applications to minimize the impact on your credit. Section 8. Miscellaneous quick tips. In addition to the strategies mentioned, there are other quick tips that can help improve your credit score. One effective method is to request a credit limit increase. A higher credit limit can lower your credit utilization ratio, which can boost your score. Just be sure not to increase your spending. Make sure all your accounts are reported to the credit bureaus. Some creditors, especially smaller ones, might not report your activity. Contact them and ask if they report to all 3 major bureaus. If not, consider transferring your balance to a creditor who does. Set up automatic payments for your bills. This ensures you never miss a payment, which is crucial for maintaining a good score. Even one late payment can have a significant negative impact. Automatic payments give you peace of mind and help you stay on track. Finally, consider using a credit monitoring service. These services can alert you to changes in your credit report, helping you catch errors or potential fraud quickly. Some services also offer tips and tools for improving your score, making it easier to manage your credit. Section 9. Long-term credit management. While quick fixes can help boost your credit score, long-term management is key to maintaining it. Start by creating a budget and sticking to it. This helps ensure you can pay your bills on time and avoid accumulating debt. A well-planned budget is the foundation for good credit. Regularly monitor your credit report. Check for errors, unfamiliar accounts, or any changes that could impact your score. Staying on top of your credit report allows you to address issues promptly and prevent them from affecting your score. Building a strong credit history takes time. Make consistent, on-time payments, keep your balances low, and avoid opening too many new accounts. These habits will help you build a positive credit history over time, leading to a higher score. Educate yourself about credit and personal finance. The more you know, the better equipped you'll be to manage your credit effectively. There are many resources available, including books, online courses, and financial advisors. Investing time in learning can pay off in the long run. Section 10. Conclusion and reassurance. Boosting your credit score overnight is possible with the right strategies. By disputing errors, paying down balances, becoming an authorized user, and opening new accounts wisely, you can see quick improvements. These actions can help you recover from a sudden drop and get back on track. Remember that maintaining a good credit score requires ongoing effort. Regularly monitoring your credit report, making on-time payments, and managing your credit responsibly are essential. These habits will help you maintain a good score and avoid future drops. Don't be discouraged by a sudden drop in your credit score. With the right steps, you can quickly recover and even improve your score. The key is to take action promptly and stay proactive in managing your credit. By following these tips and strategies, you can boost your credit score and achieve better financial health. A good credit score opens up many opportunities, from lower interest rates to better loan terms. Take control of your credit today and enjoy the benefits of a higher score.